Wonderful. Okay. I'd like to acknowledge that I'm joining you from Ottawa, which is the unceded territory of the Algonquin Anishinaabe people. My name is Susan Spronk. I am a professor of development studies at the University of Ottawa, and it is great to be here today. You have joined us for the launch of this book, Public Banks, Decarbonisation, Definancialisation, and Democratisation by Tom Marois. So I'm going to introduce you to David McDonald, who's going to say a little bit about the Municipal Services Project. And then I'll say a little bit more about Tom, and he's going to do a presentation, and there'll be time for questions and answers. We're going to use the feature of the webinar called the question and answers. So if something comes up while Tom is speaking or David is speaking, please feel free to use the question and answers. The panelists will be able to see those questions and we will address them after we hear from Tom. Take it away, David.
Thanks, Susan. Hey, everybody. Great to see such a broad range of participants from across North America. I just want to announce we haven't finalized this yet, but we are hoping to have a conference, probably focusing on public banking in Canada. But we'd certainly love to have our American friends and colleagues up for that. We're, depending on COVID, hoping we're going to be able to do this in person about a year from now, maybe next May in Ottawa. And we'll certainly get the word out once that's been determined. This is part of the broader work of the Municipal Services Project. If you aren't familiar with us, you can just Google Municipal Services Project. I was hoping we'd have our spanking brand new website up and running, but it's been delayed. So you'll get all the information on our existing website, where we have lots of publications available on the work we've been doing about municipal services, public services, I should say, not simply municipal. And we've done a lot of work on water, healthcare, electricity, waste management. The public banking side of things is relatively new to us, and it's largely Tom's work in this area. It's really exciting for me, both because it's a public institution, and I've sort of come to think of public banks as public utilities, like water or electricity, things that are publicly owned and publicly accountable. But of course, they play another role in financing other essential public services. And the work we're going to be doing and have started on in the European context is looking at the role of public banks financing public water operators. And we're in the midst, as I mentioned, of doing a series of case studies in the EU right now. I'm actually looking at the Nordic public banks and how they finance public water. And they've been doing it for over 120 years. Effective, cheap financing for public water from a public institution. And so that Nordic model is really quite exciting. But that's not always the case, as Tom's going to tell us. Public banks are flawed and problematic institutions, as well as potentially very positive institutions. There's nothing inherently good or bad about a public bank. But that's what the work we're trying to do in the Municipal Services Project, again, with a focus on the financing of public water. And after the European study, we're going to be doing a series of regional studies in Latin America, Africa, and Asia starting next year. So you can keep an eye on the Municipal Services Project website for up and coming publications, and hopefully an in-person conference on this issue in about a year from now. So I'll pass it over to Susan, but I just want to say congrats to Tom. It's a really fantastic book. I think it's really an absolutely groundbreaking piece of not just academic work, but scholarly activism work, which will help to shape what's happening on the ground. And so congrats, Tom, and I'm looking forward to hearing what you have to say.
Great. So it gives me great pleasure to introduce a friend and comrade from way back, Tom Marois, Dr. Tom Marois. So Tom is currently, has many positions. He's a senior lecturer of development studies at SOAS, University of London. He is also currently the Senior Research Fellow in Patient Finance and Banking at the UCL Institute for Innovation and Public Purpose. And I'm sure he's going to tell you a little bit more about what that means. Patient finance is a term that I learned from Tom and the work that he's doing there. He's also a research associate with the Municipal Services Project. This is what brought us together today. And so it's great to have you here, Tom, and please tell us more about your book. And just before you start, I'd also like to say it's very clearly written, especially for a book on finance. So take it away, Tom.
Thanks so much, Susan, and thanks, David, and thanks to Adrian also, who's working in the background, who's been putting all the technical stuff together for this virtual book launch, first virtual book launch for my new book on public banks. And so I'm extremely grateful. And thank you for everyone for coming and for attending. Another hour in front of the computer is a big ask nowadays. And so I am eternally grateful for that. I want to say just a couple words in terms of where this book comes from. And I really do think it is a book that comes from a community of friends, a community of scholars. So it's in many ways really begins with friends, Susan and David and Municipal Services Project, sort of working together and thinking more about the nature of what this public thing is and its importance and significance both within contemporary capitalism and thinking beyond it and what alternatives we have. And the question of alternatives is really the sort of motivating force of why I do what I do. My original sort of PhD research 15, 20 years ago was on bank privatization. And then over time, evolved into questions of financialization and all the structural problems with the power of finance really shaping the nature of development and the options we have around the world. And they, particularly Susan and David, pushed me to think about the questions of, well, what then? If we've been doing a critique of privatization, what's the alternative? And in many ways, this is precisely what my work is focused on over the last 10 years in particular, but over the long haul. Is if we want to sort of break with what most of us agree are the problems of financialization, what's our alternative? And where do we look for that? And what kind of concrete, complex alternatives can we look to around the world and have people created those? And in many ways, the answer is yes, they're imperfect, and we need to think about them. That's really the content of the book. I'm going to share my screen now. I do have a presentation. Let me just get this to full screen here. Today, you'll forgive me if I don't try to cover in detail everything that's in the book. It is really very much a presentation sort of trying to get the overall view of what it is and leading towards some questions of then, what is the future of public banks in North America, to think about that. Before beginning, I just want to say that this is really an intervention in the literature. It offers an alternative to the sort of classic neoclassical economics approaches, heterodox approaches, and including Marxian approaches, most of which I don't think really give a satisfactory understanding of what public banks are or why they're important, and that they're really sort of in need of a rethinking. It does so from a mix of a Marxian historical materialist structural framework but also theories of social forms and struggle, mixed alongside what I think are very important attention to the details and the institutional fabric of institutions themselves that you'll find within institutional political economy. And that really sort of is the theoretical framework that gives meaning to this book, Public Banks. Today, then, I just want to do three things. Overall, give a sense of the book, talk about what public banks are, why they're important, and then just sort of at the end, pose some thoughts on the future of public banks. In terms of what public banks are, hold on a second, I need to go to a smaller view, I'm blocking my own narrative. There we go. So public banks, they're not simply about ownership, but they are banks that are located within the public sphere of a state by virtue of public ownership, but it can also be by public mandate, through public law, through formal representation, popular representation, public representation within the bank itself, or through some combination of these. And all of those, in my understanding and view, qualifies a bank to be public. And this question of ownership is going to come up later on. It's significant that we don't fetishize or focus solely on this question of ownership as the or the only defining feature of what makes a bank public. Typically, like other banks, they will perform financial intermediation and a whole range of banking functions, but they have no essential orientation to them. There is a multitude of different ways in which banks evolve and function. They have no manifest destiny. There is no essential reason for why these banks exist, and they are made and remade in many, many different ways over time and in different places. And they can very much function in both public and private interests, sometimes focusing one or more on one or the other, sometimes in tandem, and sometimes quite unevenly. But there's no, again, no essential sort of destination for what they do. And they can be very inefficient institutions. At the same time, they can be very efficient. There's, again, no golden rule, the one way in which they exist. And so then what David sort of began with there, they are not ultimately good or bad institutions. They have no essential pro-private or pro-public orientation as institutions. There are many different forms, different functions, and so on. And so we, in point in sort of emphasizing this is that we really have to get away from thinking of them as one type of thing, but that they are made in time and in place. There are also many different types then. The tendency right now is to really focus on development public banks, but they're actually the sort of lesser player. The public retail or commercial banks, like an HSBC thing where you take deposits, actually account for 60% of all public banking assets. So in development ones, the ones that are more focused on some form of sector or agriculture or funding infrastructure and so on. And then the universal type are the ones that mix both those deposit taking or retail services like insurance and mortgages with the development function. All right, so those are the three types I focus on mostly. Some reference, and we should be aware of public postal banks, savings banks, and even microfinance public banks. I tend not to discuss central banks, multilaterals, with the exception of the Nordic Investment Bank, one of my case studies, or the I5. So I tend not to include them. But in that sort of sphere of the three main types of public banks, what I show in the book is that there are over 900 of them still in existence today, that they have over $49 trillion in assets combined, that they have built up an accumulation of expertise in terms of finance and banking and development and a whole range of other socioeconomic functions, and therefore have important institutional legacies, even cultural legacies that we can look to within different countries. And that the types of banks that we see today, public banks, have persisted since 1500s, even earlier in some cases, as small city banks in Europe, and that they have been resurgent since the 2008-2009 global financial crisis, and increasingly since the 2015 Paris Agreement, and the acknowledgement that public banks are going to be at the center of confronting climate change and the sustainable development goals. So what in many ways implies why they're important, but I want to focus in on this a little bit more specifically insofar as it's what shapes the core argument of the book of why public banks are important. And the one sort of guiding thread that pulls the narrative together, my core argument, is that public banks are resurgent not by virtue of being publicly owned. Again, this question of ownership is front and center, but because of the institutional functions that they have acquired over time and can perform within class-divided society. And I would add also gendered and racialized societies, to be sure. So right from the start, you want to notice that I'm moving away from fixating on ownership and moving towards the importance of what banks do, their functions, but without being functionalist, not presuming that banks have some sort of manifest destiny, or they fulfill some specific function for the smooth functioning of running of society, but that what they do matters. Okay, and that's a central element. What they do matters, and for whom in society. I look at these questions of functions then, and that really sort of anchors the empirical and historical and case study elements of the book, which are sort of the three core chapters on decarbonization, definancialization, and democratization. And I look historically and in context at 6 different case studies, split into these 3 chapters and 3 functions in decarbonization, and trying to pull out the importance of what they're doing today, the functions they perform, and root those in historical argument that's within the context of contemporary capitalism. And there are lessons from each of the 6 banks. And there are contradictions as well and problems in each one of them. So in the case of decarbonization, I look at the Nordic Investment Bank, which is in fact a multilateral bank, the one that I do look at, and the China Development Bank. And in these, the lesson, one of the functions that we see that is significant is that in both cases, they've remade these banks in ways that are significantly reorienting towards questions of how to decarbonize social reproduction, how to reduce the amount of carbon in the environment. And they begin specific mandates around that. The China Development Bank has done extensive investments in solar and other forms of, let's say, green energy, cleaner energy, as the Nordic Investment Bank stands out for its very explicit sustainability policy, where it has very clear and fairly stiff criteria about what it can and cannot fund in terms of a floor of investments that then support an argument around sustainability. Both have contradictions. Nordic Investment Bank, by and large, tends to invest more in carbonizing energy in projects because it also has a productivity mandate. The China Development Bank, we well know, is engaged in the Belt Road Initiative, which blows out of the water much of the efforts it makes in terms of decarbonization. All right, so there's always these contradictions. But also in the case of the China Development Bank, there's a lesson there in terms of this bank didn't exist in 1994. It has built up over $2.5 trillion in assets in those years. So we can look at it as an example of political will building up public banking capacity. Nordic Investment Bank was built in 1975. But then given a very strong mandate towards the environment, sort of flowing out of the crisis of pollution of the Baltic Seas. The second function that I focus in on is that of definancialization. And look at the Bank of North Dakota, United States, the North United States, and the Indian National Bank for Agricultural and Rural Development. And what is interesting in both of these cases is that they're sort of why they do what they do is in many ways a very spatial function. They both function in a oriented their operations given within their society, given the demands of their particular forms of social reproduction and so on, that they have oriented their operations so that they can pull in otherwise globally mobile capital and fix it within the spaces of their societies. So the Bank in North Dakota was, back in 1919, it was created essentially as an alternative to out-of-state banks that were highly, exploiting the farmers of the region, but then continues that function of a stabilizing force in terms of being one of the few, if not only, public bank. It's actually a commercial bank in the United States. Similarly, in India with the NABARD, is that its explicit function is to pull in multiple sources of capital from financial markets, but from all other banks, public and private within India, the commercial banks and the deposits, and channel them into rural developmental projects in terms of supporting farmers in particular, rural infrastructure, water, and electrification, and so on. But it also, in the case of India, has taken on a very important role in building up institutional capacity in terms of providing a public alternative knowledge center that informs government policy and provides all forms of data, research, and so on rural development within the country. Again, both very contradictory institutions. The NABARD in India was one of the prime or leads or supporters of microfinance in India. And we all know about the disastrous results of that. And in itself offers a form of microfinance better than the private providers, but nonetheless, we have to sort of question many of the results of microfinance, to be sure. The bank in North Dakota is guilty of providing loans to police to sort of crush resistance to pipelines in North Dakota. Both have questions or issues we should raise around questions of governance or democratization, which is the third function that I look at. And in many ways, for me, the closest one to my heart, to my normative outlook, to my sort of reasons for studying public banks and thinking of them as an alternative, this question of democratization. Can you take finance and an institution that manages money and flows of money and can direct where it goes, can fix it in places or direct it to another area? Can you democratize that? Do we have any examples? And in fact, we do. Again, not perfect, but we can look at something like the German KfW, one of the largest development banks in the world, has something, and I forget the exact amount now, 580, it's increased with COVID, about 580 billion euros in assets. It's got a 37-member board of governors with 2 ministers that sit as alternating chairs, but then with a whole range of actors from civil society, trade unions, small, medium-sized enterprises, industry, and so on, that sit on the board as the highest decision-making body within the bank, and then gives a particular character. But importantly, everyone within Germany and within the bank and its employees and the government understand the KfW as an explicitly political bank. And for anyone who's read anything about neoliberalism in the last 40 years would understand that their political project is to separate the political and the economic, understanding that to be the most efficient way of distributing financial resources. And the KfW, in a sense, blows that out of the water because it is, in many ways, one of the certainly most progressive and best run, not perfect necessarily by any means, but public development banks in the world. And certainly in many ways, one of the greenest as well. You could easily have put KfW in the decarbonization chapter, but I chose it situated in democratization. On the other hand, then we have the Banco Popular y de Desarrollo Comunal from Costa Rica, which is, from all that I've read and studied on public banks, hands down the most democratic bank in the world. Its highest governing body is a 290-member workers' council, an assembly, the workers' assembly, that then provides direction and oversight over the entire bank, which then participate. Then they have a national board of 7 members that sit underneath that within the bank. That is made up of 4 members from the assembly and 3 government members. It's actually a 100% worker-owned and controlled bank, but it is in fact a public bank because it has both public representation in the board, and it also has very clear public mandates in terms of working with communities, providing, it's a retail bank that also has development, so it's a universal bank, services across the country. It's extremely progressive in many of its policies. It has an explicit gender equity mandate so that there has to be 50% men, 50% women in all major decision-making forums. It's increasingly green. And it in fact has its own law called the Democratization law that sets out the ways in which decisions are made. Again, in both cases, you're inevitably going to find challenges where things go wrong, as they do, where decisions are bad. But the fact that these banks have societal representation within it, have been democratized and are connected to their societies, has reinforced their institutional credibility and has sort of been one of the functions of these banks, that this form of economic democratization that allows them to prevail and persist in their societies, regardless of 40 years, for example, of market-oriented neoliberal policies that have militated very much against that precise type of intervention. So why they're important is for the functions they have performed, but we also have to think about why banks or public banks are important, because they're also, as I noted earlier, not ultimately good or bad, pro-public or pro-private institutions, that they can be bent in different ways, that simply for something being public doesn't mean that it's good, and that we should, in a sense, stay hands off and just support them because this is something that in the context of contemporary capitalism, we need more of. Quite the opposite. We must recognize that there are many, quote unquote, I call as if public banks. This is a picture of Ziraat Bankası in Turkey, which I've done research. It's not in the book, but I've written other books about it and done a lot of research over the years. It's a public bank, agricultural bank, goes back to the 1880s. But over the years, in the last 20 or 30 years, it's become increasingly corporatized. And many times in the history of Turkey, mostly under neoliberalism, captured for private interest, neoliberalized. It has an explicit profit maximizing mandate now, and increasingly authoritarian under the current Erdogan government. And so we need to understand that a public bank might be public in ownership, but in terms of this question of public purpose or any substantive connection to a larger common orientation or common good, there is no necessary connection.
Tom, Tom? Sorry,
yeah.
Disembodied voice. You have about 5 minutes.
Great, thank you.
Thank you.
So in fact, it can be very much the opposite, that public banks can be bent to private purpose. So focused on de-risking private investments, focused on simply fixing market failures. And this is very much the preferred policy orientation of the World Bank. It's maximizing finance for development strategy and the billions to trillions agenda, and a sort of a revision of the PPPs we all know and hate, right? So there's no reason why public banks can entirely serve private interests. And so it's important then that we rethink public banks as dynamic and contested institutions in class-divided, gendered, and racialized societies, not as essentialized institutions, and not merely as a sort of discursive practice, but that we rethink them so that they can have a substantively more important material presence in the way we reproduce ourselves more justly and preferably green, more environmentally friendly. And so this is where the theoretical intervention, where I argue I break entirely with the economics tradition on how to understand public banks, both at the neoclassical orientation and the heterodox approach, which has tended to focus on ownership as being public ownership as having definite and defining features, neoclassical being most obvious, with heterodox economists being more implicit in terms of what they expect public ownership to deliver. So what I argue is that public banks are evolving and change because they are socially contested, because they exist within class-divided society, within capitalism, within gendered and racialized structures of power. And to better understand that, then, that means that we must analytically and conceptually put institutional functions as prior to ownership form, meaning that it's the social forces who give shape and meaning and define class-divided. That isn't social force. It doesn't necessarily mean progressive or good or anything. It means those power relations in society within social categories, groups, agents, class-divided, gendered, racialized. They're the ones that shape what public banks do, not some dehistoricized notion of public ownership. And then those functions then is what gives meaning to what a public bank is or is not. So institutional functions are prior to ownership form, which is essentially turning the economic orthodoxy on its head. So I just want to wrap up here. I've got a couple minutes, I hope, just to reflect on the future of public banks in North America. I think there is amazing and enormous energy, particularly in the US at the grassroots level for community banks in different forms. I've been working with friends and colleagues in Public Bank LA, and there's an amazing sort of movement around that. But also at the national level, this new Infrastructure Investment Authority, they're talking about trillions of dollars. We'll see what happens with that, but there's a lot of, among the CSO, NGO community, discussions among academics of what this will look like, how can we sort of best structure this institution, including forms of democratization. In Canada, we must certainly challenge the new Canada Infrastructure Bank and its initial, we've written a little bit about initial problems with it, sort of advocating for privatization. You know, we can certainly be more interesting, progressive, and accountable through that institution, but also including, like from my home province of Alberta, the Alberta Treasury branch. You know, it's a bank that's existed since the 1930s, and there's an important space there for it really to serve more public purpose, which it isn't, because it was remade under the Klein administration to be profit maximizing, a whole bunch of disastrous decisions since then. So, I mean, just to re-emphasize, and I think when we're thinking about the future of public banks, to really just center it and put it back on the table, and when we're thinking about the changes that are needed for a more just and equitable society, in my opinion, and the sort of sub-argument of the book is that we absolutely have no hope, I believe, and I would argue, of tackling the crises of financialization, the crises of inequality within capitalism, and particularly the crises of the climate change, of environmental degradation, of ecology, without the capacity to command finance for the public good, for public purpose, without the capacity to command finance to decarbonize the economy, definancialize it, slow those flows of capital, and to democratize it, to provide some form of economic democracy over one of the most powerful sort of fractions of capital that we're facing today. And without this, how we exist and persist, we're constantly, without that ability to command that power democratically, we're constantly going to have to respond first and foremost to the needs of private investors rather than public purpose. Thank you very much. I'm going to stop sharing my screen, and I look forward to your questions.
Fantastic, Tom. You gave us a lot to think about, a really excellent overview of the book. I'm very pleased we have a first question, so I'll pose it to you. So please, while everyone else warm up and put your questions in the Q&A. You can also use the chat, but the Q&A is mostly where we're going to look. So please, comments, questions in the Q&A. So we have a question, which is a struggle question about organizing, which is how would you address, or how to address, community banks' opposition to public banks?
That's a really good question. So if I understand it correctly, the community banks you're talking about would be private community banks, I would presume, not something like the local savings banks in Germany, like Sparkasse. And typically the resistance would be that they believe the public bank might overtake their business, or I guess compete with them. There are different, my response is that partly you have to look at what, I wouldn't want to advocate a universal model to this, that the sort of forms of credibility a public bank can take in a given time and a given place has to respond to the need of society. So if the community banks, if they're acting equitably, if they are supporting the projects and the people and the forms of services that are needed by that community, a public bank can play a supportive role for that, because certainly community banks are not going to have access to larger forms of patient capital, if you will, for that word, or global flows of capital at relatively cheaper rates. So in the case of the Bank of North Dakota, that's the role it plays. That's the role it has served in terms of supporting local community banks. If community banks are exploitative or more in the form of microfinance and are more about profit maximizing for their own purposes, then I would say the struggle should be about providing a substantive alternative. That where I differ almost, I differ significantly, and I think importantly with the bulk of the discussion right now among neoclassic and heterodox advocates of public banks, is that public banks should be in a struggle to take over that space, that they should provide a substantive alternative that is democratized, and that it should compete directly with local community banks, and why not? And so that's an example you could see in the Banco Popular. That is a local bank. It is nationwide, but it has branches throughout the country, and it provides an important service that is shaped by its members. And so there is no universal answer to it. It would depend on the context, but you would have to look in terms of what you want that public bank to serve. Does it have to overcome, a huge gap or a problematic gap, or could it be a more supportive role for services that might be provided, substantively well by local community banks?
Great, so we're getting lots of questions rolling in. I'm going to not pick all of them, but I'm going to focus on one that I think goes to the heart of what our main contribution of this book is, especially given your class struggle analysis. So the question is, could you give us a sense of what sort of social or political conditions tend to give rise to the right kind of public bank?
Ooh, that is a big question. What are the social and political conditions that give rise to the right kind of public bank? To be honest, I don't know if I can answer that. I can look historically at where and why public banks have emerged, and you can see that there are different ways. Sometimes they've been more top-down interventions, and this is much of the case in the post-war era, when you get the public banking explosion, where they were created very much in a way to transform capitalism and to extend industrialization. So they were created to pull in meager savings, particularly in the global south, and to channel those into industrialization, infrastructure, and so on. And therefore, those banks typically fail to have significant representation. We're often, many and some continue to be disassociated from any form of democratic governance or meaningful connections to their community. There are others that, in the case of the Banco Popular, for example, was very much a result of social struggles, of usurious financial practices that disproportionately impacted the working class of Costa Rica. And therefore there was, and in that context, there was also a fairly robust workers' movement, cooperative movement, union movement that then demanded that of the government back in the 1960s. It came to be in 1969, that found some champions within the government that then listened and converted an existing sort of usurious bank into the Banco Popular, and then bequeathed that to the working class of Costa Rica by law. So, it's a historical question, a conjunctural question, but the lessons I'm learning from particularly the struggles in the US is that there's a hell of a lot of work in a current conjuncture to educate and to show that these can be alternatives, that public banking alternatives can exist and they can function well, but it really is a struggle. And you can see the organizing, the work that's being done across the US. And then, the other features around the world right now. In the UK, for example, just started a new UK infrastructure bank. It was just sort of legislated in 2020 and began opening its doors. Again, very top-down organization, very little connection to communities. Canada Infrastructure Bank, similar sort of pattern created in 2017, but then really got a lot of pushback on that. And I think it's opened up its sort of doors a little bit, or started to crack open what it does to sort of oversight. There's no ideal. You have to deal in the condition, we all make history, but not in the conditions of our own choosing. And therefore, you have to sort of see where we're at and build organization around that.
Great. Again, I'm picking somewhat randomly here because there's lots of great questions coming in. All the questions will be forwarded to you, Tom, and anyone can write you afterwards, right? So if you don't get a chance to get on the webinar today. So I'm going to ask you a question again about framing. So how do you show the benefit of public financing banking to an overworked and often skeptical public service, especially a post-COVID recovery tool as a post-COVID recovery tool?
So if I understood correctly, if you were somebody in the public service and overworked and so on, why would I want to talk to you about it? So oddly enough, so where I work now, we have a whole bunch of governments and public servants coming to us, asking us to talk to them about public banks, because they're very, very interested in finding. So one of the words that I use in the book, and one of the frameworks that I've tried to work with, are public-public collaborations, non-competitive public-public collaborations, where the relationships between the public sector, public services, in which are not necessarily the same, they could be basic health, housing, education, so on, sort of core essential services, or there might be other sort of state-owned enterprises and so on. But what they see happened in the wake of COVID-19 as we confront the global climate crisis and crisis of ecology, is that those collaborations that you can have quite supportive collaborations between public services and public banks, because they're not necessarily, they're within the public sphere. They can be mandated in a sense to collaborate, or they might have already established long-standing relationships. And some concrete examples of this, which is actually came out in its sort of last chapter of this book, which I wrote basically in May, June of 2020, with the COVID crisis exploding. As the Municipal Services Project, we also authored another book, the Public Banks and COVID-19, and a website on connected to municipal services, that public banks reacted extremely rapidly, sort of plowing money into health services, into water services, into the areas that needed immediate liquidity now without the headaches, helping pay for personal protective equipment and so on. They're also supporting governments. So like Nordic Investment Bank was channeling billions of dollars into into some of its member states. I can't remember the exact amounts, but within days of sort of announcing programs, sort of supporting governments in their national responses, you were seeing things like the suspension of student payments on debts. So it was really, they made a fairly strong and bold response to the crisis. And it wasn't a matter of maximizing profit, but it was of supporting those services that they understood, because they're also public services, under enormous stress. And they didn't, they weren't looking to go to JP Morgan or something for a loan, but they were giving very low interest, very low requirement loans, simply to support their sort of public services across the board. And it's really, if your frame is you're exhausted because of the COVID crisis and so on, it's really a form of public collaboration. But the other big lesson we learned is that those don't just emerge overnight. They don't come out of the blue. You can't create a new public bank or create those connections at the moment of crisis. That those accumulated legacies and relationships need to be built up over time. And this is in fact a struggle that we ought to be having, is sort of extending that and creating and recreating those public collaborations for exactly this type of reason, as we confront COVID still, but as we look at the climate crisis as well.
Thanks. Again, lots of great questions coming in. I think we'll have time for about 2 or 3 more. So if you haven't had a chance, please do send us questions. I'm going to combine 2 questions that I think are related. One is, how can we respond critically to the global financial inclusion agenda in highly unbanked countries, particularly the global south? This question of bankability that we hear a lot. And then there's a second related question, which is more of an issue, I think, in North America. But I think you'll draw a parallel, which is there a reason to believe that public banks are suited to addressing affordability issues in speculative housing markets? So these questions around alternatives and what public banks' role is in the global south, and also addressing the housing crisis and financialization of housing in North America as well.
Okay, thank you. So they're sort of connected, but not quite, Susan. They're kind of different questions. Okay. That's fine. That's no problem. I'm a dexterous kind of guy, and public banks are dynamic, and we can move alongside them. So how do we, the financial inclusion legacy, I mean, the financial inclusion is really just a warming over the microfinance push by the World Bank and UNIS and the Grameen Bank and so on. And it was, ultimately premised, as your question spoke about bankability and finding forms of credit worthiness, different forms of credit worthiness to provide people with small microfinance loans that, as we all know, were abused and misused and went to all kinds of, not misused, people needed the money, but microfinance institutions are charging extortionary levels of interest on them. The alternative is that we see in, specifically in the case of like the Banco Popular in the book, as a specific alternative to microfinance. It provides exact same services across the country, but at much better terms of interest. It was historically a response to microfinance of the 1960s, in essence, right? So you see concrete examples that are built around solidarity, built around where what you do with the profits and make its way back into the bank and then support communities, and given very specific institutional frameworks to support workers over the life of their projects. So they have a pensions fund where public sector workers have sort of, let's say, sort of a portion of their wages to go into the bank and then becomes a pension for them. There's also examples, not in the book, but in the Turkish example, the case I talked about with the As-If Bank, the Ziraat Bank, historically was in essence about financial inclusion. It had a branch in every small corner of Turkey across the country, and still does in most smaller communities, and still does provide an extension, let's say, of the state's public service in terms of distribution of support payments, providing financial services in those communities where there are none, and they do it at relatively subsidized rates. And it is in many ways still, if you go talk to the managers in the community, which I have, it's a type of bank that will continue to support the community, not always and necessarily based on profit. And there's lots of problems of politicization on it. I'm certainly not going to deny that in the current context. But they also, for example, when farmers get into trouble, or they have historically, rather than immediate foreclosing on the farmer and taking the land, they will give second chance, third chance, and so on, understanding there's nothing particularly efficient about driving a whole bunch of farmers off their land so you can speculate on their land. And it's much more efficient to maintain those people on their land, the farmers on land, so they can, reproduce themselves and survive over time and continue to contribute to their families and to their economies, which in other ways, very much the purpose of the Bank of North Dakota as well originally. So it's financial inclusion, but it's one supportive, right? One that is informed by the needs of the community rather than profit maximization. And in this way, Susan, you're right, it is sort of linked to the question of housing and affordability. It's a question of commanding the bank to respond to those needs of the community, those highest needs of the community in a way that is supportive. It doesn't mean that a public bank can just make up and give away money. I think this is a disastrous strategy. Public banks can lose money, they can make money, and they can break even. What public banks must do is be financially sustainable in one way or another. And so if it's an institution that is tasked with providing sustainable housing or affordable housing for a community, and that means it loses some money, then that money must be legally covered for by the governing body of that region. So that bank is not driven into the ground, that you don't lose that institutional legacy. Similarly, there are other examples where public banks will have more, and this is where the competitive thing comes in, where they have more profit-oriented services, like they provide credit cards and loans and insurances and mortgages, and they make money off of that. But then they cross-subsidize other areas of their business where, like social housing, which is an explicit case in the case of Banco Popular, but also the Halkbank in Turkey, the People's Bank of Turkey, where they help support through their profit-making activities, loss-making activities, right? But that strategy has to be clear, transparent, accountable, and understood as a part of its mandate, rather than sort of hidden under the books, or as in the neoclassical case, seen as a marker of inefficiency.
Fantastic. Are you done?
Yep.
Great. Just so you know, there's a lot of questions about regulations. So we'll put, if you could put your email in the chat at the end, maybe we can address, but I think some of what you said just addresses some of those questions around transparency and the importance of that in terms of regulating public banks. But I'd like to end with a question I think brings us back to the themes of the book, and it is as follows. I will read it. Do you think that due to the pandemic-related economic crisis, the three main institutional functions you mentioned have started to converge? And we'll end with that one. So you have about 4 minutes.
Okay. Because of the pandemic, have democratization, definancialization, decarbonization converged? It would depend. And this is my big theoretical acknowledge or insight into public banks, that it depends. I would say that at the level of narrative and public discourse and acknowledgement at the multilateral level, at national levels and municipal levels and so on, I would say, yeah. Definitely you're seeing a convergence or an interest in the possibilities of public banks, either existing or new ones, being tasked with accessing flows of money cheaply, flows of capital cheaply, and fixing it in their communities, and the real interest in thinking about how to govern that or democratize it, and then have those flows of money really be directed and given direction towards tackling the crisis of climate finance. I think there's a lot of interest in that and will. It is very difficult to do, and especially given the weight of neoclassical economics and neoliberal thinking in the last 40 years. There's a big challenge in sort of breaking the notion that public banks are meant to de-risk private finance, that they ought to sort of sit in the back seat, and they're just sort of the, an unfortunate but maybe necessary institution that when crisis strikes, it can lend into the crisis, be counter-cyclical, but then when times are good, it should just sit back and wait for the private sector to really do its amazing good stuff and be really creative and really innovative. I think moving from that, and this is something we work on in my institution, to really sort of remaking and public banks from the bottom up, when people who work in it to people who own it, be it governments or some mix of, whatever, that they task them with being, in a sense, much more oriented towards and strategically oriented towards serving public purpose, be that green transformation, be that supporting essential public services, be that how they sort of integrate in communities and really try to sort of spur, let's say, problems of it aside, forms of sustainable development or inclusive development. Those are really at the forefront. Those are the questions that a lot of people are asking. I think for that to really come to fruition, then that's where the question of struggle comes in again. That's where pressure has to be put on the owners, the government owners of those banks, and who may need that push and might be willing to do it, but may not, know themselves what needs to be done. We're really public bank for 40 years. We've been told that public banks are hotbeds of corruption. They're nothing but political. In some cases, they are nothing but sort of slush funds for politics. So even in those cases, what's the struggle that needs to be had to sort of reclaim those public banks from sort of use and abuse? And in cases where they're more open to it, what is the struggle around recrafting that bank to be sort of more accountable, greener, and to really come out of this crisis as something far more progressive and economically democratic?
Fantastic. Okay, so that does bring us to the end of our time together today. So I will start with some thanks. Well, first, thank you to Adrian Murray, who is behind the scenes helping us with this webinar today. Thanks to Dave McDonald from Municipal Services Project, just for the Municipal Services Project and all the work he's done to bring us together to create progressive communities of scholars. It's great to see. A shout out to all the Municipal Services Project researchers out there. I see a lot of you are with us today. And also thank you to Tom for the excellent presentation and lots of food for thought. I can see that there's some folks in Quebec that maybe would benefit from being put together with the grassroots struggles, and like California is exploding right now in terms of public banking, lots of laws being passed. So we're copied the Q&A and we'll send that to you. So you'll have that information. If people want to follow up with Tom, you've put your email in the chat. So do please feel free to send anything. But I'm actually not going to thank the audience for the following reason, which is if we're truly in this storm together, which I believe we are, we're not in the same boat, but we are in the same storm. I would rather like to acknowledge your presence and say that I hope that you buy this book. And I do wish you a good end of your day. Adieu.
Thank you.